Good morning. I'm Mark Allen with Gaber.io, and I'm here today with Ken Goodwin, the founder of Jeanensis. Good afternoon in your case, Ken. How you doing?
I'm doing fine. And am I correct in saying this, Mark? Good evening or
No,
good
no, no.
morning?
No, I'm in San Francisco, so it's still
Oh,
morning.
okay.
It's just my background.
I love that background. I
And
love
I
it.
believe it or not, that was on the Edge browser, and I liked it, so I pulled it down.
Oh, wow. I have to borrow that for my next calls. That's
Okay,
wonderful.
I will email it to you later. So to start with, can you share a brief background of yourself and your work
Sure.
experience before you started at Jeanensis? Up until then.
Sure. My career started on Wall Street at the Federal Reserve Bank of New York.
Mm,
And I was there for about 10 years. I'm a commissioned bank examiner of the Federal Reserve System here in the United States. My claim to fame at the Federal Reserve Bank of New York was I was part of an illustrious team called the Term Asset Backed Liquidity Facility Team, TALF, better
mm,
known as TARP.
mm,
And TALF was very instrumental because, as you know, the markets during a 2006, 2007 period was pretty much, we took a big dip here in the US, but also around the world. And the driving force behind that were the asset-backed securities and mortgage-backed securities and commercial real estate industry with a
mm,
lot of the primary dealers and major banks and broker dealers. So that particular team was responsible for bringing that additional liquidity to the marketplace. So we brought in firms, the major primary dealers like JP Morgan Chase, Citigroup, but also they brought in clients like Rosedale Capital,
mm,
Loop Capital, firms of that nature. The Tiger Funds, Tiger Asset Management Fund, was Julian Robinson was a key instrumental participant in that facility. And it actually worked. It actually worked. It narrowed the spreads. It had an impact on the consumer marketplace in terms of consumer lending, both the automobile lending and the housing market. And then gradually that kind of dipped into the job market space where the job market started to open up a little bit more. Because as you know, when banks don't lend to each other, that's a problem.
mm,
Uh, it shows on their balance sheet that they're highly leveraged. And in that case, a lot of these banks were highly leveraged. So it worked very well. And then from that, I went on into industry. I got very fortunate. I became the, where you want to go at next kind of
mm.
person. I went into consulting. I also went into a couple of bulge brackets. And that was great because I was on the trading floor for both of them. And then I went in and I ended my career, at least on the street, at one of the top 6 consulting firms. And prior to that, that actually led me to Jeanensis, because I was at a point of, at least at that firm, at least getting to the point of being a principal.
Mm.
But it led me to Jeanensis. I got very fortunate with Jeanensis. The name, as we were speaking prior to our conversation, start off with my mom. Her name is Jeanette, and Genesis is also in the Bible. So I figured, let's combine those two together, my faith and my mom. And in Asia is where, that's our expertise, Asia capital markets. And I spent a lot of time in Japan, almost 26 years back and forth,
Mm,
in Japan, in Hong Kong, in Singapore. So we were very fortunate to win a couple of contracts with the Japan Exchange Trade Organization for foreign direct investment advisory work. So at that time, we were targeting kind of mature fintech firms and nanotech firms and biotech firms that had, a good solid revenue base of anywhere between about 2 to 3 million, and that was able to potentially segment the marketplace in Asia. And the benefit for Japan was Japan wanted these companies to have a satellite office in Japan. So eventually they can hire individuals and Japanese citizens and so forth. And that would, create some kind of economic development there. Now, the plus for us was that we had the exposure in Japan from a business development and corporate strategy side. So that kind of, created a very good opportunity for us to work with a lot of the investors because we were creating a portfolio where investors were saying, hey, you guys got a nice portfolio of firms that are growing in terms of revenue base and valuation. How can we work with you? So we started doing some matchmaking work with several of the investors in Asia. That also caught traction here in the US. And so I became more involved in particular syndicate groups here in the US, and that gave me exposure to venture capitalism.
mm,
I got very fortunate. One of the firms that I actually was helping to bring to Japan an artificial intelligence firm, introduced me to blockchain.
Mm.
Yes, and I said, okay, because I knew about AI. Now I knew about natural language processing (NLP), but I didn't know about the distributed ledger technology, what that was. So I went to an event with this individual, and I just said, "Holy crap!" I said, "My God, you mean tell me they've been doing this for like the past 5 years?"
Hmm.
And that individual said, "Yeah, they were doing it in Japan for a long time." And I said, "Oh, wow." It just kind of went right past my eyes. And so I started to get more involved in the blockchain technology space. I started to advise firms. I was on a board for several blockchain companies. Some were quite successful, some are still operating now in terms of decentralized finance products that they're offering out in Europe, uh, also here in the US. So that became a part of a service that we were offering as a firm. And then I realized at that time, I said, you know what? We have a very nice mix in the fintech, redtech, blockchain space. And I've been raising capital for a long time for a lot of these fund managers. A lot of the fund managers kind of said to me, they say, hey, I think it's time for you to do your own fund. Instead of just raising for us, why don't you just raise your own money and deploy your own capital?
Mm.
And so initially, last year, we were at the New York Stock Exchange. Initially, we're going to use a WD-GAN model,
Mm.
but we realized that model is really for hedge funds, and we like venture capitalists. So we really are focusing on venture financing, which is a bit different than hedge funds. So we like the idea of working with senior management, executives, C-level teams on the advisory side in terms of helping out in product development and market segmentation, but also giving them the capital so they can grow from one stage to another stage. So we created a 144 Trailblazer Fund. We're still on the raising side of it at the moment. We hope to deploy capital at least in the first quarter or early second quarter of next year. I spend a lot of times talking to limited partners and other GCs, as well as other founders of venture capitalists themselves, to see if they want to do syndicate deals. So it's been a unique journey, a couple of pivots, but it's all starting to make sense.
Wow, that's quite a background there. So through all of that, I assume you've done distributed work, but what's your experience with remote work? Have you done a lot of that, especially in other countries?
Yes. You know what? We most of our calls are remote
Hmm.
work now, so we're spending more time looking at firms. We believe that's an industry that's really going to grow even more. Being here in New York City, most people are not going to the offices.
Hmm.
Uh, I can only imagine that's probably the case in San Francisco.
It is.
Um, we're seeing that firms, at least in the fintechnology side, firms that offer products and services that help individuals working from home, they tend to do very, very well because there's a lot more demand that's being done, both on the tracking and tracing. I'll give you examples. There's a couple of firms out there that are tracking and tracing how employees are using their time.
Hmm.
The employees want to know how employees are using their time. So they want to make sure that people are doing the kind of assignments that they were supposed to be doing. The other areas that we're seeing is in terms of the tracking of data, storage of data, how data is being stored, but most importantly, how data is being analyzed. So we're finding that those types of companies that are being used to help employees to work better, are working out very well throughout COVID-19.
Hmm. And how about yourself? Are you a remote company? Or are you do you have an office in New York?
We do, but we're remote.
Hmm.
Most people don't want to go. We have services to WeWork, and most people don't want to go to WeWorks. Unfortunately, I don't want to call them out. They've been very kind to make their terms and agreements a lot more, conducive to the environment. But it's just that naturally, as you imagine here, as you can see in San Francisco, but also New York, because the density of the population, people just don't want to go to the offices. They prefer to stay at home. They like the idea of being with their children if they have family members. But also at the same time, the COVID numbers have gone up significantly, both in New Jersey and New York.
Yeah, no, I know. My actually son moved back to San Francisco, back in with me from New York, back in June. So quite interesting. So there's more and more of that. And then actually real estate in San Francisco is going down and real estate in the San Francisco suburbs is going up, both commercial and residential. I don't know, I assume that's happening in New York also.
Your assumptions are absolutely correct. We might as well call each other Twin Cities.
I know.
Uh, yes, yes. Now, here's a phenomenon that's happening here. Because the real estate prices, at least on the commercial side, has been dropping. You're finding a lot of the information technology firms are buying them up. So you're finding Google, Amazon, they have the cash to do it.
Yes.
So they're filling in these offices. Now, what's unique is that San Francisco, New York, I would imagine, or well, at least in New York case, as I would imagine in San Francisco case also, they are smart cities.
Yeah.
So it kind of fits the plan and what had happened with creating these smart cities around the globe. Well, it's going to be led by these information technology firms. I kept saying the enterprise firms are going to be the leaders, with technology firms being kind of the third-party vendors where they have opportunities to partner with these IoT firms. And you're seeing that actually happening now in most of the cities around the world.
Yeah, it's interesting because you can see in San Francisco, you go on the 101 and you can see the Google buses and the Facebook buses going up and down the 101 every day. They transport their employees, and it makes sense. Just the real estate there is cheap now, so you might as well buy it up because it doesn't stay cheap very long in San Francisco.
Exactly, exactly. And here in New York, I mean, here in New York, but the driving force behind that, Mark, is you got to have people. If you don't have people going into these to the land, at least into the real estate, it's going to lose value, and everything around that real estate will lose value too, in terms of the stores and the shops. So having a face-to-face ability, or having a face-to-face meetings, were very important, because it was not just the meetings, but it was what was done after the meetings. Really brought in that capital into those places. And it's unfortunate, I was in New York last week, actually speaking to a banking friend of mine, and and you can see the differences. I mean, of course, we had the elections here in New York that changed over the weekend. That was one of the few times where I saw the city was alive again. It was interesting. The city was alive. No disrespect, no offense to the Trump administration, but the city kind of just erupted. More people were outside. And it actually had an immense impact to the businesses. So you saw more people going to the restaurants, to the stores. The downside of that was that you had, of course, the increase in COVID-19 and it's going up. So this is some good and some bad in all this.
Right, and it's funny. I think almost everybody was just glad that the election was finally over, and half of the people were really glad that it was over, and the other were like, right?
You know what? Wow. I don't want to speak too soon on that. It's not over until, there's that old saying, it's not over till the fat lady sings. And we know that now. I mean, anyone who's, Trump is from New York, or at least in this area. And anyone who's worked with him before, been around him before, knows that he's not someone to quit easily.
Yes.
Well,
so, as I remind my friends around here, it's not over until the Electoral College certifies it.
Exactly.
So we've still got another, I think it's another 3 or 4 weeks before that, if I remember right. It's sometime in December, I know. I don't know the exact date. So,
exactly.
Yeah. So is there anything like Jeanensis? You've touched on it, but what is your area of focus? Is there a particular type of company you're trying to help or fund?
Yes, our fund is centered around fintechnology, red technology, enterprise blockchain, as well as what we call big data. Big data for us are firms that are SaaS related, cloud-based types of firms. So we focus mainly on firms that have revenue. So we're not focusing on the startups. We'll follow the startups, and we're very active in a lot of the incubators and accelerators, both at the university level as well as the corporate level. So we've been involved in SAP.io. We've been involved in a German accelerator here in the US. Salesforce, they have a great accelerator group where Salesforce Ventures kind of dip down into that. We're deeply involved in several accelerators and incubators. We feel like they offer a great opportunity in the future.
Mhm.
But our firms tend to be firms that are very mature. They have a solid management team in place. They have revenues already.
Mm.
Their next step is to either improve in terms of the revenue base by going across overseas, expanding to different marketplaces, or using that capital to expand their product base and
Mm.
product offering, and of course, human capital behind that. So we want firms that are digitally transformed,
Mm.
firms that are going to help the older firms, the kind of the stodgy banks and financial institutions in terms of the digital transformation. We believe that it's going to happen twofold. Either the big banks and the big firms are either going to have to accept digital transformation, and if they
Mhm.
don't accept it, then they're going to be X'd out.
Right.
Or there's an opportunity where they can either acquire or merge or bring on some of these fintech firms to partner with them to be a part of their whole integration system. And that's where the opportunities are at for a lot of these fintech firms, where they can provide their solutions to help these firms to kind of digitally transform their operations, both on supply chain, both on in terms of the lending portions of that, deposit portions of that. So you're starting to see that happen gradually.
Mm.
Some people may call them challenging banks. I don't like the word challenging banks because it gives off the impression that there's not room for partnerships. I think that there's great rooms for partnerships for both sides.
Yeah. No, I've dealt with some fintech companies, and I have a feeling what we call a bank, the banking system today is going to look a lot different in 10 years from now. Would you agree with that?
Yes, I think it's going to. It's ironic because it's definitely going to be data driven.
Hmm.
Definitely will be data. It's a system,
Yeah.
and that's what most people have to understand. That is, it's not just a national system, but it's a global system.
Yeah.
And that global system have to shift,
Hmm.
and it is shifting. And ironically, the place where it's shifting at the most is in China.
Hmm.
China has definitely benefited from COVID-19, and they've used, they've had the opportunity to kind of digitize their entire society.
Hmm.
The banks already, as you know, there's a central bank digital currency that they already deployed out there. They tested it within several banks as well as within their consumer marketplace. They've actually have track and tracing
Hmm.
from a society standpoint. Their e-commerce is far more advanced. So they're gradually, they recognize the shift and that's going to happen. Africa also,
Hmm.
the continent of Africa, because of the fact that Africa has already been exposed to using mobile devices, the infrastructure was there already. It was a question of whether or not they can have a bigger or better ecosystem in place to support the infrastructure. So you're finding a lot of because of Africa being such a youthful continent, you're finding a lot of great new companies coming out of Africa on the payment side, and then of course the Caribbean and other and Europe. Europe is a huge player. The U.S. is coming along
Hmm.
slowly.
Yeah.
It's coming along slowly. We've had the entrepreneur ecosystem already.
Mm.
But the driving force behind that has been the e-commerce place, but also the bigger firms, enterprise firms
Hmm.
are starting to come in and they're starting to provide the capital. And they're realizing that their clients are saying that we want more efficiency, we want more accessibility, we want more speed, we want more access to information. And the companies are starting to use that for their benefit.
Yeah, very good. Well, Ken, I want to thank you for your time today. You have a wealth of knowledge, especially financial and global financial. It's a great tribute to yourself and your career. Thank you for your time, and have a great day.
Yeah, Mark, thank you again for taking the time. And I just want to say, please send that background.
I will. I will do that this afternoon. All right.
Thank you.
Bye.